You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. And before we begin, I want to make sure you go to wealthformula.com. Check it out for some of the resources available for this website, including access to the Accredited Investor Club. If you are a listener and you're interested in potentially getting involved with private investments and you meet the criteria as an accredited investor, which is essentially not something you apply for. You just either are or you aren't based on your income or your net worth, which is, $200,000 as an individual for 2 years. You have to make that, or $300,000 if filing jointly, or you have a net worth of at least $1 million outside of your personal residence. So those are the criteria. If you meet that, join the club. It's free to join. And just get onboarded. So again, that's wealthformula.com. Go to Investor Club and sign up. Now, let's get to today's show. When I started this podcast a decade ago, I was completely focused just on real estate. And, listen, it's still a big thing for me. But back then in particular, I had some pretty dogmatic views, didn't really consider anything else, kind of almost sort of made fun of everything else, which is kind of stupid, right? But back then, the mindset worked for me. I've been a real estate investor since 2010. And while the market's in a tough spot right now, as we know, we did enjoy over a decade of a bull market. And most people who have been in real estate for, multiple years, even despite the current downturn, have done pretty well. And, that's the reality with market cycles in general, though. That's just how things go. Things go up, things go down. And you hope the good times outpace the bad. And if you do it right, generally history says that you will do well. Now, regarding real estate, I will just again restate that I believe we're essentially back in the year 2010, right? The market's taken a beating. And here's the thing. If you can stomach it, this is actually prime time to buy. And again, history shows that people who act when things look grim, well, they often end up kind of, with the big rewards down the line. And so I do think it's important to recognize that because again, you don't just invest when the cycle is up, you invest when the cycle is down. Now, getting off the real estate topic though, I want to say this, that this time as we ride this cycle up again, I am actually a lot more open to other types of investing myself these days. And what I've been thinking about is that, I want to learn. I want to continue to learn about a lot of different stuff, try to keep an open mind and along the way share more than just, stuff about real estate and some of the usual stuff you hear on this podcast. I mean, there's a whole world of potential out there, and it's really important for you and me to stay informed. Okay. Now, lately, actually, I've been especially interested in tech. Why? Well, look at what's going on out there. But, the thing is, I did my surgical residency back in San Francisco. And that was, of course, about, 150 years ago now. Seriously, it was probably finished probably about 15, 16 years ago. And at that time, I actually went, being out of training and, or during training, I was living with some guys in San Francisco, and a lot of those guys were tech guys, Silicon Valley guys. In hindsight, I kind of regret not getting to know that scene a little bit better. It's an interesting scene, and they were doing some very, very cool things. I wasn't all that interested. I was busy. I didn't have any money to invest anyway, so I never thought about learning anything about it. But better late than never, right? So now, what's interesting is that I find myself in this position where I, with this podcast, it's a platform and I get to invite and talk to some really, really smart people. And it really is up to me to sort of focus which way we're going to, move. And so over the next few years, what I want to do is I want to provide more education, not just for you, but for me. This is a great way to learn on, what these other things out there are, right? Now, this week's podcast is actually a great example because I really had a lot of fun with this podcast. I learned so much in such a short period of time. And I think you will too, if you're interested. And it really sparked my curiosity about all these other potential opportunities in tech, right? Maybe through, I don't know, through angel investing, venture capital, all these things that, I'm not really involved with, but maybe I should learn about them. Maybe I should get, granular and try to get inside of these communities and then tell you what I learned. I don't know. But, at the end of the day, if you're going to do that, if you're going to get involved with that kind of investing, or if I'm going to get involved with that kind of investing, I got to know a lot more, and you got to know a lot more. And talking to my guest this week's podcast is certainly a step in that right direction. In less than an hour, I learned a lot. I learned, what this big hullabaloo about China's AI platform DeepSeek last week was, why it freaked out people in the tech industry, why NVIDIA got its butt kicked in the process. I learned a lot about quantum computing because I kept hearing about this quantum computing and it sounds big and scary and like it's going to take over the world, and I had no idea what it was. And I feel like after today's conversation, I get it. That's kind of a big thing to know, right? I mean, if you live in this world that's moving this quickly, you got to know this stuff. And what else did I learn? I learned about how Ethereum, which, I actually thought this too. I think that'll eventually get wrecked by the Solana ecosystem. Anyway, this conversation with Arun Krishnakumar is absolutely worth your time. It is a really interesting conversation. Hopefully it'll get you kind of excited as well. Huge ROI on time spent here, just with what you're going to get out of it. And we will have this interview right after these messages.
Wealth Formula Banking is an ingenious concept powered by whole life insurance. But instead of acting just as a safety net, the strategy supercharges your investments. First, you create a personal financial reservoir that grows at a compounding interest rate, much higher than any bank savings account. As your money accumulates, you borrow from your own bank to invest in other cash-flowing investments. Here's the key. Even though you've borrowed money at a simple interest rate, your insurance company keeps paying you compound interest on that money, even though you've borrowed it. Net result, you make money in two places at the same time. That's why your investments get supercharged. This isn't a new technique. It's a refined strategy used by some of the wealthiest families in history, and it uses century-old, rock-solid insurance companies as its backbone. Turbocharge your investments. Visit wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Arun Krishnakumar. He is the head of growth, EMEA, at Marinade Finance. He's a digital assets operator, investor, and author. His focus areas include digital assets, DeFi, and fintech. Arun has had a career spanning over 2 decades, building technology solutions across retail and investment banking, hedge funds, and consulting. Following this, he spent over 8 years raising and deploying venture capital, has invested and advised mentored venture firms across Web 2 and Web 3, and has operated on several boards. He's the author of Quantum Computing and Blockchain in Business, the Metaverse Economy, and Restartup, a founder's guide to crisis navigation. Arun, welcome to Wealth Formula Podcast.
Thanks for having me, Buck.
I have a number of questions to ask you about quantum computing and blockchain. But before we start, just relevant to the recent news, I think, there was this issue with DeepSeek and China. I think artificial intelligence, at least to my audience, which is, smart, professional, probably non-technical types, you were probably wondering what the heck is going on? What is all this about? What is all this noise? Could you break that down for everyone just to try to get a sense of what just happened?
Sure. I mean, it's interesting you ask this question because I was at a family office event literally a couple of days back, and I was talking to a particular guy there, and I mentioned to him early in the morning that DeepSeek is potentially going to hurt NVIDIA's growth. And later in the afternoon, he found me in the crowd, and he basically said, I should have acted on your input or intel. I would have made so much conclave.
It
So
just lost 17% of his stock.
it was
Yeah.
crazy. $500 billion of assets wiped out. But in general, what the general take is this: the AI boom that we are seeing over the past 2 to 3 years has its implications on GPU organizations such as AMD and NVIDIA. Data centers are blossoming because there's going to be a lot of data that's going to be processed and for the AI engines that need the data. So effectively, what's happened is that's really driven the NVIDIA boom. However, with DeepSeek, the disruption that's coming in is it's basically created with low cost code and works on low cost machinery. Simple as that. So it's a lot more efficient, and even with the amount of data, from what I understand, it doesn't need as much amount of data to get to a point, because it has its own way of inferring some results to get to the final point. So it's not as data intensive as the existing OpenAI solutions that we have, which is really what really kind of took the market for a day. I mean, I think it was almost a knee jerk reaction from a few. I think when the market corrects, it often overcorrects itself, right? So
Sure.
it was something like that. But and I think these firms that are betting on AI have a future. It is here to stay. Nvidia is a great firm and all that. But when such disruptions show up, people start to get nervous about the big bets that they have placed on these organizations. That's
What
the
was the question? I guess the question, like from a technical standpoint, again, for us non-tech people, is the idea that the NVIDIA creates a type of product that is higher end, more expensive, and it may not be required to do what we need to do?
Yeah, something like that. But
Yeah.
effectively, it's not just AI, but if, for instance, the gaming industry that's booming as well, gaming industry needs a lot of high tech GPUs, and then you have the same thing with blockchain as well. As blockchains blossom and scale, you're going to have a lot of machines wanting GPUs, and that has really been driving the NVIDIA economy, if we can call it that. And they were way ahead, or they are way ahead in that space from an innovation perspective, which gave them an edge from a first mover advantage perspective. So that's really that's really the story.
Interesting. Oh, well, okay. Well, let's kind of move on to quantum computing, and it's one of the reasons I really wanted to talk to you, because there's been a bunch of news, sort of in and out. Google quantum computing. What does this mean? And again, from the perspective of my audience, which is again, maybe we're doctors or lawyers, business owners, whatever. We're like, what is a quantum computer anyway, and why does it matter? What's the big deal here?
What's the big fuss? Right. So classical computers run on zeros and ones. They call bits.
Yeah.
Very deterministic, stable. Whereas quantum computers run on what we call qubits. That's the unit that runs. That is a foundational element of quantum computers. The advantage is qubits can exist in both zeros and ones at the same time. So
Uh-huh.
effectively, what you're able to do is model multiple scenarios into a qubit at the same time, right? So when you're most of the problems that we face on a daily basis, be it financial services, be it drug discovery or healthcare, be it logistics, you're dealing with probability problems. And the challenge that comes in when you're using classical computers for these probability problems is because they can only model one path at any point in time. It takes a long time for them to model all the different paths,
Yeah.
and that soon gets out of hand in terms of how much they can handle. Whereas quantum computing or quantum computers deal with that type of problems better. I can explain this with a bit of example.
Yeah, that would
Uh,
be great.
yeah, so I can talk about three different examples, but the fundamental concept is the same. So let's take portfolio optimization in financial services, drug discovery, or basically, let's say, and then cancer treatment in the medical field, and the third example could be logistics. Let's say flight path optimization. So these are the three different problems, right? While we are looking at them as separate industries and separate problems, the fundamental computation behind it is very straightforward in the sense that the complexities are very similar as what I'm trying to say, which is if you put portfolio balancing within financial services, let's say you have a bunch of stocks, bunch of commodities, bonds make up your portfolio. Let's say you're holding oil as in commodities and or automobile or maybe automobile or airline stock in your stock portfolio, all within the bigger portfolio that you're trying to balance. When you're tuning or tweaking your portfolio, rebalancing the portfolio every 3 months, you change one aspect of it, it'll invariably have its correlation with the other part of your portfolio. So you have to touch if you're changing automobile or airline stock, you have to touch your oil stock or oil commodity holding as well. So because they're all correlated, you're basically modeling for or optimizing for more than one variable at the same time. Now imagine this with 50 different variables with hundreds of thousands of correlations across them, right?
Yeah.
How do you optimize for all of them at the same time? So that is one problem. Same way with flight path optimization. Imagine, I mean, just visualize the world with hundreds of flights flying across the world at the same time. You optimize for one flight path, it is invariably going to hurt the path of another flight. So when you're optimizing for one flight going from, let's say, New York to London, you are effectively affecting other flight paths as well. So you have to be optimizing for multiple variables at the same time to see, okay, this is the most optimal state of the system at any point in time. The same thing you could do with healthcare as well. So if you're going through chemotherapy on for cancer treatment, you kill your cancer cells using chemotherapy, but that will invariably have its effect on healthy cells. So how do you model all that? How do you model? I can go on, right? So the same problem.
No, I think what you're saying, if you correct me if I'm wrong, basically what you're saying is that the ability of these qubits to have multiple outcomes at the same time and process those makes it much more powerful, because the usual 1-0 bits, it would just, it would just take way too long, because they're sort of working in a linear way rather than in, I guess, for lack of a better word, for like in 3 dimensions or 4 dimensions or something like that. Is that right?
Absolutely. So the way I see this whole thing panning out is once quantum computers become mainstream, you're going to see most of the analytics and intelligence move toward to the quantum computers, and storage and the data integrity part of it will stay with classical computers, because that they can take the storage. We already are seeing some of these hybrid models emerge, because that's a lot more optimal, using both the best of the both the worlds. But effectively, what you're going to see is quantum computers, the power that quantum computing can bring, and the speed at which some of these problems can be solved. It has real world benefits. Like if drug discovery, which is like a 15-year process where it takes for a drug to get to market, you can shrink it down to 1 to 2 years once you start modeling it on quantum computers. In financial services, if you're running risk models on your portfolio, and like for instance, I have a risk background as well. When I was at Barclays Capital, I was managing the risk analytics system there. We would struggle to really kind of redo the whole portfolio in terms of analyzing market impact when there is an intraday issue. If there is a shock like what we had earlier this week, we wouldn't be able to reval the whole portfolio and see how the risks are panning out, because it's just computationally so intensive. Whereas if you use quantum computers, you can practically see exactly what a market shock can do to your portfolio almost in real time.
I guess the next question would be, how close are we to quantum computers? Because, Google had this, made some noise and about how they had come out with something that effectively was, this quantum computer. But my understanding was that was kind of the first announcement of an actual quantum computer that was working. How close to reality are we in terms of having quantum computers be a real thing?
I mean, the general industry take is about 5 to 10 years. But the way I would look at it is, some of those, particularly quantum computers, the innovation is happening across the world, and many nation states are looking add quantum computers as the innovation that's happened with the atom bomb, right? So they're going to be very quiet about it when it actually happens. So it is not going to be out in public. They're not probably going to launch a massive PR campaign about it and talk big things. They'll be telling things which are unimportant at the moment. They'll be throwing out progress that they're making, which are really unimportant. But when it really happens, the way I see this is that gives them a massive data security and data privacy advantage over over the other nation states. And if you look at the international landscape there, even like when I was writing my book on this topic, back in the day, I think China had invested about $15 billion, and this is just public sector. I mean, coming from the government, right? Apart from that, you have private sector innovation and grants and investment that's going into the space as well. With the US, for instance, it was much behind on the government funding to blockchain, quantum computing, whereas there have been a few hundreds of millions invested into quantum computing based companies in the US. So the private sector is doing a little bit more in the US, whereas China is leading the whole space. And if you look at it from a patent perspective, China have got about 50% of the patents filed in this space, followed by the US. They've got about 25%. So there is clear market dominance there, even at the very research lab stage, where this tech is not even mainstream yet. So they all see this as almost like defense budgets in some sense. So that's really how it's going to happen. I don't think we will hear from China, for instance, if they manage to crack, they're able to kind of crack the common cryptographic models like the RSAs and the ECCs that we use for our email addresses and emails and the bank accounts that we have. You're not going to hear from them that they managed to create a tech that can decrypt these passwords.
And that brings me, I guess, to one of the questions that it's got me really thinking about is Bitcoin and the Bitcoin network and blockchain. Obviously, one of the big advantages of Bitcoin is the security, and the question is then, I mean, could quantum computers effectively, break that blockchain security? Effectively, could that create a problem for Bitcoin?
It could. That's the short answer. So Bitcoin basically is, I think they're using something called ECDSA in terms of encryption. Let me try and get the full form, but basically it's, I think, elliptic curve digital signature algorithm. Sorry, I always forget this.
No, that's okay. I don't think we wouldn't notice we wouldn't know the difference, so you could say whatever you want.
So effectively, the ECDSA is something that the Shor's algorithm, which is the one that a quantum computer would be able to use when it's actually mainstream to crack all the private keys that's being used within the Bitcoin network. However, there is a lot of research that's happening in this space. So even back then, this was 7 years back when I wrote this book. But today we basically have, like, for instance, Ethereum is exploring quantum resistant ZK snarks, which is again to address privacy and security concerns. If you look at Solana, which is the chain that I work with full time, they basically have recently announced something called Winternet's one-time signatures, which is effectively every transaction will have a private key. So it's even if a quantum computer manages to crack a private key, it's the scope of, it's a very limited scope in terms of how it can affect the holding or the transaction or what it can hack into. So there is quantum resistant cryptography that's happening across the board. I mean, I'm just talking to you about Bitcoin. I'm just telling you about Bitcoin and blockchain world, but there's a lot more happening in the from a government or particularly the US government for our public sector.
Yeah, just in general with cryptography, like just, all security issues seem like they're vulnerable if there's not some sort of response to.
Absolutely. So if you look at the NIST's initiative, they launched a program called I think it's called post quantum cryptography standardization project. It was called in 2016. And in 2024, towards the end of last year, they actually finalized the initial set of quantum resistant encryption standards. And this basically will allow them to start evangelizing these quantum encryptions across multiple different applications, be it emails, app stores, banking technology, and all that. But when I was doing the research on this particular topic back then, there was a very cool. I think there was a one principal concept I took away from someone I spoke to back then, and what he was saying was we have to be really crypto agile, cryptographic agile, or we have to demonstrate cryptographic agility, is what he was saying,
Mm-hmm.
which effectively means that when we use a particular cryptographic technique in whatever applications we are creating, we should be able to create it in such a way that in the future we'll be able to just pull it out and push a new one in. So that
Yeah.
is really what keeping it agile from a cryptographic perspective means, and that is something that the IBMs of the world, the Googles of the world, and all the pioneers of this technology have been evangelizing back in like about 7-8 years ago. So the US government is also focusing on it because they don't see this as an innovation problem or innovation thing. They see this as a defense issue. So when someone cracks mainstream quantum computers, it is really going to be a massive dominance in cyber warfare. I don't want to call it cyber terrorism because
Yeah. Well, it
uh,
could
it,
be, right? Could be.
well, it could be, but the thing
Yeah.
is, it is effectively whoever gets it right on day one is got a massive advantage from a first movers advantage perspective.
Let me ask you this, and the other major technology that is obviously kind of in the news and kind of making a huge impact in the world already is artificial intelligence. We talked about this a little bit already because we were talking about DeepSeek, but how do these things all work together? Like, I mean, how does quantum computing then affect artificial intelligence? Does it accelerate artificial intelligence? Does it, are these two things that are maybe not necessarily, they're clearly not exclusive of one another. It seems like artificial intelligence could be significantly accelerated by advances in quantum computing. Is that?
Absolutely. So the way I look at it is blockchain takes care of the integrity layer, which is how you store data with high levels of integrity. Quantum computing takes care of the processing layer, which is how efficiently can you process all the information being thrown at you, despite it being highly correlated, multivariable problem space that you're solving for. And AI will really be the predictive analytics space where the machines keep learning. So they all this it's not going to be that one tech is going to come collide with another and we're going to see a death of the death of AI or blockchain once quantum comes in. These are all going to coexist in the world that we're going to live in, and quantum computers are going to only make our lives better, I hope.
Yeah.
And so will the AI. I mean, when AI was initially kind of when for instance ChatGPT started, there was so much noise about, okay, this is going to basically get so many people fired and so many people are going to lose their jobs and stuff like that. It just makes sure that it takes care of all the low cost, low value challenges that we have in our day-to-day life. Of course, the quality of AI, as it improves, the quality of work that we can get out of AI will also probably increase as well. But it is going to be a process, and humanity will adjust to it. We'll all learn from this and see how do I complement with the machines that are working around me, and make sure that I live in a more efficient space. I think that is the way we should be looking at it.
What I was thinking about too is the position I would not want to be in right now is somebody who had a startup because it seems to me that you've got all these technologies and you don't know exactly, in a way, like they could potentially replace a number of businesses, just even in terms of the things that, these things that people are creating. You can create apps for yourself right now. I mean, they may not work great you can effectively start programming things for yourself that you don't need a business for. And so how is this affecting the startup world? And I'm sure like this is especially from your perspective as as an investor and venture and all that, you've got to be looking at this from 10 different angles and saying, well, is this business going to be viable in 5 years? It's a great idea right now, but I mean, with all these technologies, you would probably just, write a few sentences and have this business for yourself.
It,
So
it's fascinating because you mentioned that I'll have to look at something from 10 different angles to see if that is going to work. I could instead just throw all the data I have about the business into Chat GPT, and it can tell me what the risks
yeah,
of AI to that business is. So you're looking at it as you're talking about the challenges I have. I'm thinking about, okay, how cool is it
oh
to have
yeah,
this
right,
kind of
right, right,
to have this with me. So I think what it will force us to do is, I think what it'll basically stop people from creating small incremental innovations. So
yeah,
you see a project, it's done well, and you see a project that just adds a small layer on top of it, repackages it, and sells it for $100 billion business. I'm making this up, but whatever, right? So we've seen that kind of stories time and time again. But with AI coming into picture, you will have to work harder to really say that there is a massive piece of innovation that's happening here, and it
yeah,
is actually goes far and beyond what already exists out there. And I was talking about AI to someone even yesterday, and he's actually starting a new AI business. And one of the things we were thinking about is, how does AI help within financial services? Albeit you can't really use AI to say underwrite lending products, for instance. So anything that's really customer facing, it's hard to use AI in a regulated environment. I said you could still use AI for prospecting. It speeds up your time in a big way if you're
yeah,
using prospecting clients, using if you use AI for prospecting clients. So it's to me it's actually a nice problem to have, because now what we'll all be demanding from our innovators and founders is that, okay, show me what you got. We already have all this, so we're not interested in this. Prove yourself. You have to. I mean, they have to work harder if that's what you're asking,
yeah.
without a doubt. But I think because we have these machines in there, the problem statement that I am thinking of solving, I can actually crawl the entire world to know what is out there, what is not out there, and what else can I do to really stand out using AI.
My investors, I think, are, where we tend to be sort of real estate investors, that kind of thing. But I've been encouraging people to, start looking at a lot of the tech because there's a lot of opportunities. But, obviously it just becomes like a mountain of, where do you even start? And so, I've previously done shows where some of the ideas were, hey, you can't figure out like how artificial intelligence, who's a winner, who's a loser. So maybe you invest in energy and uranium and things like that. What are some practical ways that you think that if somebody's listening to this saying, I want to get exposure to this, but I'm not picking companies. I don't know how to pick companies. How do you how do you get exposure to this in your portfolio, and so that you can benefit from all these things that are happening?
Absolutely. It's a process. There is no silver bullet to getting high quality deal flows, if that's what you're asking.
Yeah,
When I was looking at quantum startups or AI startups back in the day, I would be really looking for ecosystems, and the ecosystems could be accelerator programs, incubator programs, people where people get together, investors of a particular tech get together, universities, right? So universities actually breed a lot of innovation. So if you take quantum computing in the UK, Bristol University was an amazing place where you could just go talk to people and figure out who's doing what, where's the coolest thing that's happening. I used to have really close connections with the quantum computing space within Oxford. So it's about understanding how this whole innovation ecosystem works,
yeah,
where the spots are where you should actually go talk to, connect to. You should also be adding value. It cannot be just that you go there, suck all the information, and don't give
yeah,
back much. You have to be seen as giving as much as getting out of the system. But when you start building that and keep talking about it, and it's something that you also need to do, which is go on social media and talk about it. I used to be, and I'm still very active on LinkedIn, for instance, and I talk about what I do on it on a regular basis, because people know that if I'm an investor, I'm looking for quantum projects. Um, they're going to be more inclined to know about me if I'm loud about it on social media. And then we used to run a lot of programs with partners whom I know had connections with at those in those times. It was fintech, AI, blockchain, and we used to have hundreds of projects showing up, and it then becomes a problem of plenty.
Right. Absolutely. And tell us a little bit about what you're doing, and if people can get involved with that.
Well, at this point, I think I've moved on from my quantum adventures. I'm focusing on blockchain. I'm trying to avoid the AI distraction at the moment.
Yes.
So, of the three techs that we've spoken about, I think the bit that I'm currently focusing on is blockchain. I'm very close to the Solana ecosystem. I don't know if you've heard of the project.
Yeah,
We have.
I've talked quite a bit about Solana, actually. In fact, I've been in cryptocurrency for at least since 2017, and I just as an off, I was looking at Ethereum, going, Ethereum's number 2 in everything. Ethereum's number 2 as the market cap, and it's number 2 in usability and speed, because now Solana's there. So I just got rid of Ethereum. I didn't know what they're doing. They have like some sort of existential, problem with their Ethereum foundation right now. It just looks like it might crumble. And on the other hand, as you mentioned, I've been talking about Solana actually, not telling people to invest, but making them aware of this thing, since it was probably under $100, and now where are we at, 200 something. Tell us a little bit about that. What makes Solana so special?
Well, a lot of things. Let's start with the tech. It's basically a very frictionless blockchain where you can actually use, right? So it's not that today. It was so frictionless to use even in 2021 and 2022 when I first started using it. The user experience hasn't changed a bit. It's only gotten better, is what I'm trying to say.
Yeah.
So it starts with the infrastructure layer, which allows you to transact with very low transaction friction. So that's the first bit. The second bit is the quality of people involved. I have known the people involved within the Solana ecosystem again for 3-4 years now. Many of them know me as well. So I know the quality of people there. It's world class, and it's going to be very hard they have to be very unlucky to kind of lose the lead that they've got from here, to be honest. There's such a good team there.
Yeah.
And I think the third thing is the community. When I say community, I mean investors, I mean the developers, founders who build more projects on Solana. They all believe in the tech. Even back in the day in 2022 when FTX happened, a lot of them vouched to say, I'm going to be on Solana because that is the chain that I can really build what I want to build, and I can scale seamlessly. I can't do that on Ethereum. So I don't care what is happening outside. I'm going to cut out the noise. I'm going to focus on building. And we've had that for nearly 18 months before the hockey curve really started to turn around. And since then, it's been no looking back. So a bunch of things. One ecosystem doesn't perform this well based on just 1, 2, 3 people. It's like hundreds of people coming together, multiple different factors working in our favor. And now, if you look at, for instance, I go to both Solana events and Ethereum events. And when I go to Solana events, what you're looking at is nobody talks about the infrastructure layer now. They're all looking at what is the coolest app I can build? What is the coolest game I can build? How can I bring the billion people onto my platform? So though that is the debate that's happening within the Solana community. Whereas if you go to the Ethereum events, ETHCC in Brussels earlier this year, in 2024, you could hear people talking about, okay, how do I add optimization to my chain? How can I make sure transactions happen seamlessly? I'm like, you are still talking about transactions happening seamlessly without frictions after 9 years of that chain being live, right?
Yeah.
So you know how behind the curve that ecosystem is. I'm not saying
they get really clunky, right? Really, like in almost sort of bureaucratic problems with with Vitalik Buterin and the foundation. They're just tripping over themselves.
Well, that the political problems, I'm frankly, I don't care about.
But doesn't that interfere with with the tech, doesn't it?
Well, it does, but for me, the way I look at any system or any project is, can I use it?
Yeah.
Right? If I can use it and I'm having fun using it, I'm sure other 7 billion people I can relate to them using it. With Ethereum, the other day, one of my friends wanted to test a transaction to my wallet. He sent $10. It cost him $18 to make the transaction. I mean, why would I use that platform, right? Of course, I can use L2, which is a performance hack that Ethereum has relied on, but the way. Then how do I move my assets from one chain to another to make this transaction? Then I need to move assets back to my Ethereum chain if I'm using the money on Ethereum. All that hack you don't need to worry about on Solana. You just download a wallet, top it up with money, and off you go.
Yeah, interesting. Well, this has been a really fun conversation, Arun. Thank you so much for your time today, and looking forward to following you a little bit on LinkedIn and all this stuff. And would love to have you back again sometime soon.
Thanks for having me, Buck.
We'll be right back.
You make a lot of money but are still worried about retirement. Maybe you didn't start earning until your 30s and now you're trying to catch up. And meanwhile, you've got a mortgage and private school to pay for and you feel like you're getting farther and farther behind. Good news. If you need to catch up on retirement, check out a program put out by some of the oldest and most prestigious life insurance companies in the world. It's called Wealth Accelerator. It can help you amplify your returns quickly, protect your money from creditors, and provide financial protection to your family if something happens to you. The concepts here are used by some of the wealthiest families in the world, and there's no reason why they can't be used by you. Check it out for yourself by going to wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back to the show, everyone. Hope you enjoyed it. I got to tell you, that was one of the most interesting conversations I've had in a while, at least on the tech and financial stuff. As you may know, I also have a couple of longevity type podcasts as well. And so, I'm sort of knee deep in that world, trying to keep myself immortal. I guess it's sort of my midlife crisis, I guess, is trying to prevent it from being midlife for me. At any rate, hope you enjoyed this show. I do want to, again, remind you that if you are interested, you should go to wealthformula.com and check out the Accredited Investor Club. There's activity this year, and I think with the return of bonus depreciation, I think it's going to be some good stuff. So that's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.